Heya Cryptozens, tonight's show, Weekend Roundup. These are all brand new stories I didn't report on earlier this week. Meta, Bipartisanship, A16Z's NFT license, OpenSea says no to Ethereum proof of work, and Celsius news. It's 10 p.m. Pacific. The date is September 3rd, 2022, and welcome back to the Crypto Overnighter. My name is Nikodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. Keep in mind, nothing in this show should ever be considered financial advice. Monday. NFTs are continuing their invasion of social media. Now, Twitter, of course, being famous for the NFT PFPs. Well, now the Zuck has opened the gates and NFTs are free to invade Facebook and Instagram. Because thanks to a recent update, Facebook and Instagram users can post their NFTs and digital collectibles to their accounts just by linking their wallets. And we've been kind of waiting for this one for a while now. Because back in May, they put up a blog post, and in the post, Meta said that Facebook's roughly 3 billion users will get the ability to share NFTs. And then earlier this month, they updated that. Meta said that Instagram users in 100 countries would be able to post digital collectibles on Ethereum, Polygon, and Flow blockchains. So at that point, this kind of beta testing was available to 1 to 2 billion users as of the second quarter this year. Now, Meta said, quote, "As we continue rolling out digital collectibles on Facebook and Instagram, we've started giving other people the ability to post digital collectibles that they own across the Facebook and Instagram. This will enable people to connect their digital wallets once to either app in order to share their digital collectibles across both." Now, reportedly, when the NFT is shared, either on Facebook or on the gram, it automatically logs both the artist and the owner. Between that and cross-posting, that's much nicer than having to do everything by hand on Facebook and then to turn around and have to do the same thing on Instagram. And this isn't new by any means. You can already cross-post Insta stories to Facebook and Facebook posts to Instagram. Now, one thing to be aware of, this only seems to work with the apps. You connect the app to the digital wallet you're storing your NFTs on. Right now, you can't post an NFT through a web browser like Chrome or Edge. It is, however, known to work with MetaMask, Coinbase Wallet, Trust Wallet, Rainbow, and Dapper. But really, is that such a big deal? Most people's phones have Facebook or Instagram already, if not both. Just getting NFTs on people's phones on a daily basis could be a real game changer, especially in terms of adoption. But face it, Meta stands a good chance to clean up if they create their own NFT marketplace and then attach that to Facebook and Instagram. Heck, they could even start introducing special NFTs for use in Horizon Realms as well as on Facebook and Instagram using that same kind of revenue/adoption stream. In May, Meta applied with the U.S. Patent and Trademark Office for something called MetaPay, believed to be a crypto payments platform. Maybe that's their calculation, right? Because they had Libra or Diem, and they kind of let that go in February because of regulator pushback on a global scale. That said, the Zuck himself has said that there is a massive opportunity to make, quote, trillions in the digital asset space as it matures. And that is seen kind of as the go-to choice with the Flow token. They have ecosystem partners that include Warner Music, the NBA, OpenSea, and the Ultimate Fighting Championship. Just an absolute powerhouse brand. Now, I'm not a Facebook or Instagram user, so this isn't all that big a deal for me. That said, there are people who are rightly concerned. Facebook and Zuckerberg don't have the best reputation on the web, and I'm sure he knows it. When he was interviewing with Joe Rogan last week, he said, quote, "I think the right way to establish principles for governance that try to be balanced and not have the decision-making too centralized." Tuesday. I have said a number of times, both in person and online, that I think if crypto becomes a left versus right issue, both sides will lose. I firmly believe that to be the case. That if we continue to lose ourselves in this pointless political infighting, it's going to negatively impact the future of crypto, at least as far as the United States goes. Tom Emmer is a Republican representative from the state of Minnesota. Maybe he heard my saying, because he's suggesting that regulating crypto shouldn't be a win for either Democrats or Republicans. And so it was that Emmer was being interviewed by Axios reporter Brady Dale. Emmer reportedly said that many of his colleagues were treating crypto as something to be afraid of, like this massive risk. That rather than an opportunity investment for the United States. He believes in attracting flies with honey. He said that encouraging people like SBF to stay in the United States would do more to help U.S. residents than chasing those people away with regulatory uncertainty. Now, we've covered Emmer a few times here. He's not a big fan of regulation by enforcement approach that some agencies like the SEC seem to be taking. He's questioned the partisan divide in crypto-related legislations and policies. Now, Emmer is a Republican. Elizabeth Warren, a U.S. Senator, she's a Democrat. She is not at all a friend of crypto. In fact, she is a strong, outspoken critic of crypto in Congress. If she's not proposing extreme positions that would shut down bank-provided crypto services, now remember that? She and some members of Congress went on a letter-writing campaign to try to get support for a law that would shut down bank-provided crypto services. Now, if she's not trying to pass extreme legislation like that, she's calling things like DeFi, quote, the most dangerous part of the crypto world, and equating crypto investments to scams. Now, for his part, Emmer says he wants crypto to remain politics agnostic. He said, quote, I feel that crypto cannot be partisan. This is literally about looking at America and opportunities for Americans. If you try to take all risk out of this stuff, well, you're just going to take away a lot of the opportunity. It can either happen here in this country, or it will happen somewhere else. That said, bipartisan work on crypto will be difficult to come by. He and Warren both have negative scores in terms of partisanship. That's according to the Lugar Center of the McCourt School of Public Policy at Georgetown. That has Warren coming in with more partisan than Emmer. But there are some bright points. Gillibrand and Lummis, for example. Both senators, one Republican, one Democrat. Both of them supporting crypto with an expansive plan called the Responsible Financial Innovation Act. Introduced in June 7th, it's the best crypto-related legislative package I've seen offered by Congress so far. But also you've got Stabenow and Boozman, Democrat and Republican. They're working on legislation that sets Commodity Futures Trading Commission on top to be the key regulator of crypto. Now, too bad, none of them have a chance of passing. Bipartisan politics this close to a midterm election virtually ensures that no form of cross-party cooperation will happen. As usual, the people are the ones getting hurt in the fights like these. Congress is supposed to be there to help us, not hurt us, not neglect us. But this childish, hateful bickering and infighting make that all but impossible. And they should be ashamed. Wednesday. Andreessen Horowitz, commonly known as A16Z, is a venture capital firm. Well, they announced that they designed 6 new licenses. These licenses are geared towards NFTs, and they're kind of based off of the Creative Commons model. Called Can't Be Evil licenses, they're set up with a range of rights available. Miles Jennings and Chris Dixon put together a blog post. Now, Jennings is the general counsel, and Dixon is a general partner. They wrote that some NFT creators use something like a Creative Commons license, but maybe with some customization. That said, most NFT projects don't. There's either no license at all, or what is available is pretty poorly designed. Bad licenses and poorly designed licensing schemes can lead to a whole host of problems, including copyright issues. And on top of that, because there's no standard, most NFT buyers don't know what rights they actually get for their purchase. which is important. That is the whole point of NFT, establish ownership. If ownership doesn't mean anything, if it's not well protected and well defined, what's the point? Anyway, Jennings started off a tweet thread with this saying, quote, "Today, we're thrilled to be launching a slate of open-sourced Can't Be Evil NFT licenses. These licenses are designed specifically for NFTs and were inspired by 20-plus years of work by the Creative Commons." Now, in that thread, they enumerate some rights, and here they are. 1. To help NFT creators to protect or release their intellectual property rights. 2. To grant NFT holders a baseline of rights that are irrevocable, enforceable, and easy to understand. And 3. To help creators, holders, and their communities unleash the creative and economic potential of their projects with a clear understanding of the IP framework in which they can work. Now, while these licenses are irrevocable, they are also amendable. And the different licenses provide varying rights in 5 different areas: sublicense, modify and adapt, copy, display, and distribute, hate speech revocation, and this is a big one for a lot of people, commercial use. A16Z has made these licenses available as smart contracts. They're available on the A16Z GitHub. Now, we've seen cases like Bored and Hungry. That was a Bored Ape-themed restaurant based off of the NFT that the owner held. Seth Green had his ape stolen. Some were, foolishly in my opinion, they were thinking that because the NFT was stolen, Green would no longer be able to produce the show that he was building around his Bored Ape. These kind of ownership rights are exactly what a lot of people buy NFTs for. And this lack of clarity in a legal sense has led to disappointed buyers. And these buyers are threatening, quote, a wave of legislation, which might be the thing to do, I guess. At some point, precedent would have to be set, and then we could move forward, knowing what rights we do and don't have as NFT holders. Well, this discussion and the confusion around NFT ownership has reached the halls of Congress. Last June, Senators Patrick Leahy and Tom Tillis asked that the U.S. Patent and Trademark Office, as well as the U.S. Copyright, they want a detailed study of the concerns that people have had with NFT intellectual property rights. Thursday. So, everybody knows OpenSea, world-leading NFT marketplace, and as I'm sure all of you know, there is an Ethereum merge coming. This month, Ethereum is due to go through the merge. That's where the beacon chain gets integrated and Ethereum goes from being a proof of work to a proof of stake blockchain. This is expected to result in much less energy usage. People won't be mining as a means of establishing consensus when writing blocks. Staking will determine who writes the blocks and collects the rewards. Because the rewards are what it's all about for some people, right? Getting paid. I understand that. And some people have sunk a lot of money into their rigs. People bought so many video cards, NVIDIA got in trouble for not claiming the crypto space as a significant source of income. It's true. In fact, it got so bad, I honestly believe that that's where a lot of the hate for NFTs come from. A resentment for crypto for jacking up the price on good video cards. I'm a gamer, so I get that too. Anyway, there are enough Ethereum miners that are upset about this turn of events. They're rebelling. And by rebelling, I mean they're not accepting the status quo. They plan to make their own blockchain in Ethereum, but keep the proof of work mining. Now, I don't know how realistic this is. I mean, if they fork off of Ethereum as it sits today, it's not just as simple as copy-pasting the code base and firing up a new machine. There's code in there that would have to be ripped apart. Seems to me like they would just migrate over to the Ethereum Classic. It's proof of work, it's established, it's already up and running. Seems pretty simple to me. So, since these Ethereum miners announced their intention to stand up a proof of work Ethereum, reaction has been mixed, mostly from exchanges. Some are already listing the coin, some are waiting to see, and now we hear from another segment of the crypto industry, NFT marketplace, or at least one. OpenSea says they're not going to do it. They're not going to speculation on forks. That said, they also said they only plan to support NFTs on the proof of stake version. They said, quote, "We are committed to solely supporting NFTs on the upgraded Ethereum POS chain." they took to Twitter to announce that if there are forked NFTs, they just won't show up on OpenSea, because OpenSea is only going to support the proof-of-stake blockchain. They also took the opportunity to highlight that they're getting things ready for the merge so that it goes smoothly. They said that they don't believe that there's going to be any major issues, which is important because OpenSea is the first NFT exchange that opened its doors back in 2017. 80 million NFTs, $31 billion in volume. OpenSea is, to borrow a phrase, too big to fail. I don't mean that they should be bailed out, not ever. But I do believe that if this Ethereum proof of work, if it causes OpenSea problems, or worse, if it causes their customers problems, that will play havoc with people's confidence in the platform. Friday. I would love to find $70 million. That would make such a big difference in my finances. Same thing for the Celsius network. They apparently found a pile of cash, and that cash is expected to carry them through the end of the year. Representing Celsius, Kirkland and Ellis filed the document in their third bankruptcy hearing. This was in the U.S. Bankruptcy Court for the Southern District of New York, and in that filing, they referenced, quote, approximately $70 million of proceeds from the repayment of USD-denominated loans. You notice what it says there, right? USD-denominated loans. Well, that's important because here's what happened. A Kirkland and Ellis lawyer said that there was a mix-up. When they were going through the ledgers, they saw this line item and thought it was a dollar-pegged stablecoin, which wouldn't work. They couldn't use that to continue to fund Celsius. But now that they know it's US dollars, that they can use that to fluff up their very thin liquidity and keep the lights on by paying its business and its restructuring costs, that buys them more time to try to find a solution out of this mess. Since they put a halt to their lending business, I'm pretty sure all they have left is the Bitcoin mining operation, which has not turned a profit yet. So October 7th is the magic day. That's when they expect to receive the majority of the repayment. So taking this new chunk of cash into account, it looks like Celsius will be running on $42 million by the end of November. And remember, we've talked about this before. Until they found this money, they only had enough cash to get through October. Now it's believed that this will last them to the end of the year, if only barely. So while this is well timed for Celsius, which, good, I'm cheering for them. Not because I want Celsius to exceed. That's not it. But by extending this potential runway for Celsius, hopefully more depositors get made whole, or at least closer to whole. I didn't have any money on Celsius, but still, I'd rather see the people, the retail investors, see them getting taken care of first. So Cell, their token, has spiked recently. It rocketed nearly 50%. And this was on news that Celsius might be returning a portion of the locked up funds to those retail investors. As we like to do on the show, let's take a look at the numbers. At the time of writing, Cell is trading at a rate of $1.42 each. It reached an intraday high of $1.67 per token. This is up from lows of $1.15 before. And all of this happened after the Celsius network made a motion to the bankruptcy court. They asked that their clients have, quote, certain custody and withhold accounts should be able to withdraw the amount of digital assets owed to them. Frankly, I don't know that this rally for Cell is going to last. The fundamentals haven't changed, the macro hasn't changed, and the market hasn't changed. Barring exceptional news to the contrary, I expect this little relief rally to be short-lived, and Cell will drop again down to its sub-125 area, if not lower. I wouldn't buy it, and if I had it, I would sell it. Soon. Not financial advice. But it is a nice positive story to end our weekend roundup with. And that's going to do it for our weekend roundup. I want to thank you, my listeners, because when you stop listening, I will stop talking. Take care of yourselves, but take care of each other too. We'll see you tomorrow night.